Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of March 24th, 2025. Let's get started. SEAF signals for this week, a little bit defensively skewed. Energy coming in at our top selection with an overall ranking of 7. Financials and healthcare. Healthcare taking a little bit of a breather on the trading week, but having a really strong tactical month and strategic quarter. Financials and energy being 1-2 in the trading week, and seeing a nice high score for energy. Kind of rolling down the list here. Utilities taking a little bit of a breather after having a little bit of strength, coming in at 12, just trailing healthcare. Real estate still hanging on in that middle of the pack, and starting to see a little bit of a positive momentum in materials. Consumer staples leads the pack in outflows for the trading week, and consumer discretionary buried at the bottom. Heading into our heat map. Couple of key notes. Net inflows on the trading week were 0.78%, so not super strong in any one particular direction. We started off the week with a 1.2% inflow on Monday, which is relatively strong, and then flows kind of petered out throughout the rest of the week, mixing between positive and negative. What we are seeing a little bit here, though, is we're seeing a lot of outflows in everything other than energy and financials. Technology technically ranking at 3, but this was at a 0.05% change, so really no change here on financials. Going to highlight, on technology. Going to highlight this a little bit in a rainbow chart, why we don't always bite on any one in particular trading week. Flows into energy at 0.37, so that's pretty close to our 0.4%. For a significant flow for energy, and financials at 0.23% inflow, looking relatively solid. We are seeing a nice little green skew here up toward the top, a little bit of red at the bottom, but there are some mixes in as we're a little bit on a inflection point in the market. I actually have a new chart for this week just to highlight. So up top here, I have this SPY open, high, low, close, so just the price chart up top. And then on the bottom, I have all sector total net assets. So I often talk about the entire bucket of the 11 sector spiders. These are the flows if you were to add all of the total net assets for each 11 sector spiders into one total, and kind of highlighting what's going on here. What I wanted to show here is as we interact with the 21-day moving average on this total net assets chart, as we can see here, every time we break below this 21-day moving average, we have a little bit of a falling of a little bit of a correction. So we broke the 21-day moving average here somewhere in February 21st, 22nd area. So that those total net assets broke down. What we're doing is we're coming in and approaching this this 21-day moving average. And the other thing to note here is that 300 billion mark. So I talk about that 300 billion mark as it seems to be a local level that we're trying, we struggled to get above and below. So we're actually, the 21-day is converging on this 300 billion. And as we can see here on this price chart, we're actually converging with the 200-day moving average in SPY. So what this screams to me is an inflection point. We're either going to come up and touch these moving averages and break down, or we're going to get above them and potentially rally up. So we don't know what's going to happen yet, but I just want to take a note that we're having some converging parts, not only in the total net assets for all 11 sector spiders, but also in the SPY chart. So just something to keep a note on while we're discussing our total net assets. Heading into our rainbow charts. Healthcare coming in first. As I said, healthcare took a little bit of a breather here on the trading week, coming in at 8, but this is a 0.1% outflow, not killer in the sense, and we're still here in a nice relative outperformance upflow starting in the back half of January to the early part of February. So still seeing some nice relative outperformance on healthcare. What we don't know is this a breather or is this a new emerging trend? The reason I brought up the inflection point is because healthcare is a bit defensive, right? So if we can hold, or if that resistance holds and we are unable to break those moving averages that I showed in that previous chart, we could have a nice room to move higher here in healthcare. Healthcare being defensive, if we break through those resistance parts, we might see some weakening in healthcare. We saw obviously a little bit of weakening on that trading week, but we'll find out if that is a top sell-off or if that's emerging of a new trend. So watch this space. Consumer discretionary, I like to show the tops and the bottoms. So consumer discretionary at the bottom, really nice prolonged relative underperformance, really going back to mid-December. We peaked up here and favored, attempt to break through that, but that has failed, and we are in deep avoid. So consumer discretionary, definitely a place to avoid at the moment. Technology. I wanted to bring up technology on purpose because I do get this question sometimes is, we see inflows coming in on the trading week, and why aren't we just trading the trading week? Why are we taking that tactical and the quarterly? Those flows have happened in the before. So I wanted to take this time to kind of break this down a little bit. So as you can see, as I showed earlier, and I'll bring it up, technology shows a 3 on the trading week in terms of inflows. You would say, hey, let's buy technology. Technology is still in a deep avoid area as well as in a downtrend in the relative outperformance versus SPY. This week didn't have the strength of flows, which is why I like to show this heat map. So although we have 3, the strength of flows at 0.05% is not enough to really move this thing higher, as we never got any kind of movement here on the relative outperformance versus SPY. Still in this downward trend. So we want to see the momentum build up over several time periods in terms of getting these assets flowing in one particular direction, because what this allows us to do is say, hey, there's conviction in these bets. There's managers that are willing to take this overnight or even for multiple weeks at a time. So we do like to see the buildup of asset flows over the 3 time periods that really drive us on this upper favored area and then really drive that relative outperformance. As we can see here, going back to May and June of last year, really strong outflows over 3 time periods really drove this relative outperformance up. We are not seeing that strong flows in 3 time periods. We have 1 time period, and even in that time period, the flow is relatively weak. So just to note, answering a couple of questions that came in, why do we not focus more on that trading week, is you really need to have these accumulation of flows to really drive that relative outperformance higher. Going into energy still looking relatively strong, kind of negotiating these upward resistance on the relative outperformance chart, but seeing some nice strong flows in energy, continued flows in energy, actually strong all 3 time periods, nice relative outperformance. Energy seems to be doing well. Last but not least, financials. Financials took a little bit of dip into neutral here. We've had a couple of these in over the last couple of months, really. Overall, though, financials looking strong, relative outperformance, really strong trend line for relative outperformance going back to June of 2024. We are sitting in this nice upper favorite area. Financials at a 2 on the week. It's got to clear out that tactical month that we saw this dip on, but financials looking relatively strong. It's going to have a little bit of upward resistance on this relative outperformance chart coming in here. But as long as flows continue to see strength here, we can sit up in these upper favored. Financials has done a pretty good job of trending over the last year, really. Sitting up in these upper favorites for nice periods of time, giving us some nice relative outperformance. So looking for financials to continue to lead us. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.